Rahman, and this is my video number 5 on financial planning Tacit knowledge series. Tacit knowledge series. Um, I guess I left up with first meeting where we talked about what is it you are looking for. What kind of information are you looking for from your client? Um, and So the idea is that now that you did complete your first meeting, the question is that what would you do with that information? Who do you share with? Okay, now be aware of there is a privacy issue, and I'm sure in your career somewhere you have some sort of training on privacy, and I think most financial institutions actually offer that. So I won't talk about it. It is very, it is quite often very simple how to maintain privacy. But rather, let's talk about what is it you do with that information that you received or you perceived from your client or prospect. So now let's go back and analyze the situation. So you left the meeting, and then what is it you do? Do you drive back to your office, or do you conduct another meeting on the way? So this is something that administrative that has to be done by your assistant. Make sure that you have a good assistant who actually plan your schedule very carefully, so you do not waste your time, because time is money, in fact. So now I assume that you have collected. Let's go through basic information first, and then as we approaches, as we learn more and more, we'll actually discuss more information how to get into in-depth planning aspects. But let's start with something very basic. What is it we collect from a client or a prospect? So we collect their income, their expense, their insurance information, their investments, their tax information, and last but not least, their real property. Okay. So what is it we do with that? This information that we just collected. So often people has tendency, they collect that information and they leave it in their briefcase or in a suitcase or whatever it is they call it, binder, for a while. And then the information gets stale or old in their mind. So they wait for several days, probably often a week or so, and then they can't remember what took place during the meeting. So it is best idea to while you take notes, you actually study the material that you collected from your client or the information or the facts. You go to your office or wherever you work from. If it is from your office, if it is from outside, if it is anywhere, coffee shop or wherever you go, just take it with you. And while you are there, you study that information. Make sure that the information that you received is correct. So now go through this income. See what kind of income they have. This is the basic criteria. When you collect the income, you need to be able to understand the income you collected from them is actually a determination of what kind of planning will take place. It's not rather the expense. Expense can be adjusted. So it is the income, type of income they have. Do they have a professional income? Do they have employment income? Do they have business income? What type of income they have? Or do they have pension income? Right? This will tell you right away, what they do for a living. So let's say, for example, let's start with our average job since my first book, Financial Freedom, a fictional financial plan, is about people who are tend to be regular, someone who earns between the first tax bracket to 130,000. It could be a little more, but let's put it that way. So Who are these people? These are basically unemployed. Often, it could be often recently newly started a professional, or often it could be a business owner, newly ran business. So you have to be very careful when you determine the information that you perceive or you receive from the client. So make sure that you identify the type of income. So the moment they tell you that, they remember I tell you about the listening to them very carefully, tell what they do. So this is what you would know is that will also give you some sort of idea what type of people they are and what type of client they'll potentially be. Often profession actually indicates type of personalities they are, because when an HR hires someone, they actually go through personal assessment process. So that will tell you whether the person is conservative by nature, a person is riskier by nature. It will tell you. I'm not going to get you actually which professional, this is something that you will develop over time. So often people who has a secure job, they might say, hey, I have a secure job. What's the point of planning? So we'll not talk about that today, but rather get back to the income and expense consideration or analysis. So once you have that your income information, find out what tax bracket they fall in. So obviously, by now, assuming on the second meeting, you would have the client fax you the T1 general. If you did not have that with them at the time of the meeting, that can possibly happen because sometimes your client wants to hear you out before they give you the information. So beware that you have their information on hand at all time before you go for the second meeting. So now that you're sitting in a coffee shop having a coffee and you're brainstorming about your client, what is it can you offer? You have their income, you have their expense, you have their insurance information, their investment information, their tax, the real property. It seems like a lot of information, right? In a simplification, a simplified version of what I'm telling you, it doesn't assume much. And when you put them together, there's a lot of information that you're collecting. Remember to have some sort of, if you're new, builders of Excel sheet or some sort of pro forma facts collecting sheet, call it whatever you want to call it. So have a paper ready with you and or checklist perhaps, and then as you go along. But once you're experienced, you really don't need to have that. You would know exactly what you are looking at. Remember, I told you is that by looking at the profession, you'll be able to determine often the lifestyle they have, the expense they have, and what kind of personals they are, often with certain confidence level. But this is actually a prediction model. This is something that you keep it to yourself and do not share that with your client. This is something that will allow you to understand or study your client or prospect. So now that you have your income information, now let's move on to the expense. This is where the problem is the expense. Let's think this way: is that they often, you have your expense above your means. So this is something that will give you indication. Do they spend carefully? Do they keep track what they spend and how they spend their money? So this is something that will allow you to give you indication or red lights or some sort of signals that will allow you to understand their behavior pattern, how they spend their money. Are they in a saving mode, or they are on a expansion mode, not expansion, in a mode they spend without care. So this is something that you would have to take a look at it and understand it. Now, be careful. Be careful about the information. Be sensitive about the information, and be sensitive about what you say to your client, because this is something, their personal lifestyle, and you're commenting on it. You really have to be careful. How do you say it? And this is not an easy task, telling someone that they're spending too much or they're spending too less. So, so what type of expense they are incurring? Are they incurring expense within the country itself? Often you will come to meet, I won't talk about the professionals today, but rather talk about regular personals, that they, so what type of expense they have. Do they take vacation often? If they do take a vacation, where they take that vacation? Right? Is it within the country itself, or is it outside the country? How they spend their money? Are they really producing something for the country? Now let's not get into the economic benefit. That's something that you could read my book to know about how that produces economic benefit to the country itself. Spending well. Let's not get to that spending well, but talk about the expense on a personal level, how it could impact. Right? So spending something without care could possibly hurt your future, your retirement, your in fact your current living. So this is something that you really have to be careful about, how you spend your money. Spend wisely, but spend enough, spend sufficient. Do not just spend do not be how do I say, do not parsimonize overly. Be open to this expense, because if you do not know to spend, you cannot create wealth. So that's another way of looking at it. So spend wisely. So look at that expense, how they're expensing their wealth, their income, and their money. So now that you have a bit of idea about their expense, their income, and so forth, let's take a look at whether they actually secure their income, how they actually secure their income. So let's say, remember I said there are a lot of shifting parameters in our life, and something that uncertainty is something that one of the major issues that we face in our real economy is the uncertainty. What we have is uncertainty that produces a lot of bias when it comes to planning, a lot of errors in the planning itself. So look at the probability of uncertainty in their job. So let's assume that they have a job of lab assistant, or a professor, or a teacher, or a driver, or in fact, they work in a manufacturing industry, or it could be anything. Or they could be a manager in a factory. They could be a manager in any organizations. So think about this way: is that they could lose their job at any time. Job is not something secure, despite of having union. Okay, so often I heard that I work for a great organization. They have a great union, and see, the problem that we are facing today is it's if you're not producing and if you're not a productive member to an organization, it is highly likely that at some point you will face some sort of challenge. And what kind of problem can you face if you are in a unionized environment? So ask your union representative or your organization that what kind of job challenges you face. So often in a unionized environment, you see a massive layoff. That is a good indication of that something that built up over time. So and often you see in a unionized environment, management are really active. So you really have to be careful with your job. What is your job, and what is it you do for a living? So don't just assume that you have an unionized job and your job is secure. That is actually so backdated thinking. Because companies nowadays are actually smart. They hire smart HR, they hire smart professionals, they hire professionals to reduce their cost expense, despite of they know that the spending without spending they cannot produce, but they want to make sure that they're spending in an efficient manner. The spendings are measured up at the end when they have a budget to follow. So let's not drift away. Let's not drift away from our regular conversation. Our regular conversation is average Joe. So let's focus on that. So now that you have the insurance information regarding your client, you have your tax, you have the tax information, you have the real property information. So let's ask them, do they have a property? What kind of property they have? And one of the biggest challenges they face is that if they have a property, whether they have a proper title on the property. That's something that a good lawyer would be able to help. Remember, I said you would need professionals to help you with the planning. So this is where the professional strategy comes in, is that you would have a lawyer to review their will, their property titles, and so forth. Often there are errors in a property title, how they are structured. There could be, there could be other problems. There could be problems, the legal problems, the legal description within the property itself. So, excuse me. So have that review by a good professional, a good lawyer. So ask them if they have a lawyer. If so, great. Ask them to review that. If they don't have it, you could ask them to find one. If they ask you for one, please be sure to refer at least 3 or more, or very least 2. I tend to have offer, give them 2 or 3 in the event if they ask for any professional advice or any professional help from the other industry. So referral, be aware of when you're referring to someone, is that be aware of referral fees. There are the restrictions to that, so be aware of that. So now let's get back to that. The information that you collected, all this information that you collected, what are you going to do with that? Are you going to sit tight? Or are you going to work on it? Let's assume that you're going to work on it. So now, do not wait too long. Give it about a day or 2, maybe no more than that. I tend to start right away on that so that I don't forget the information, because there are some details that you forget often. If you hold on to the information too long. So spend some time to pre-populate some sort of information on your binder, but be sure, I tend not to use the generalized software. Rather, I actually do things in either an Excel sheet or on a pen and a paper to just go through what they have and what they're missing. Make notes, lots of notes, and especially when you review their notice of assessment, you will see that there are some sort of indications from the CRA what they're looking for, and what are the opportunities that your client has. Often you will see they have a significant amount of RSP limit. Often they would have a TFSC amount that is cumulative there, and often they might have other informations about their property. There's so many information, or there might be a red signal that you could pick up from that notice of assessment. If they're behind on a tax, these are certain things that their notice of assessment will tell you about. What needs to be done, whether they need accounting and taxation help. So this is something that will allow you to understand what is it you need to do in terms of professional synergy. So now let's assume that they need a good accountant, or they don't have one, or the tax is being prepared by themselves, or someone they know, a friend of a friend. So anyway, be open about it, but be sure that they're also sensitive about their use to. Remember, it is very difficult to train someone who actually build up a habit, or rather, so rather than training someone new. So most of your clients, if they're young professional, it's easy for you to work with them. But if they're old, I don't think that's the right word. I would rather say that if they're experienced, within the industry itself, or they have long time of working experience, they actually build up a habit or a tendency or a resistance, and that is going to be a challenge for you. So beware when you're sharing information, you are sensitive about it. So now we know a few things, that not to wait with the information, work right away, and pre-populate some sort of plan for your client for the second meeting. Rather, I would like to say it's a discussion topic. So obviously, you're not going to build a plan on the second. It takes time. So now you collected all this data from your client. You have all this information. You built your notes. Now, prepare a discussion notes. So what I do is that I prepare discussion notes based on Mr. Client or Mr. Prospect, based on our discussion, this and this. This is what are my findings are. You need to, just to give an example, you need to let's assume that someone has low income, or but they are trying to reduce their expense. So to advise them, instead of reducing expense, rather they might try to earn more income, because they can only reduce so much. So earning potential could be an issue for them. So make a note of that. And then if someone is spending too much money on caffeine, or something else, they have a bad habit. So let's say, for example, someone has tendency to park. If you take a look at it, they have a parking expense of over $1,000 a month. That gives you a red signal. So perhaps you could advise them alternately, just indicate what they could do differently. It's not that they forget about. It's not that they do not know about it. It's something that they are too busy to pay attention to it, especially if the client has more money than if they fall into the third tax bracket or so forth. So those are the clients that they actually face expense without care problems. So anyone within the below the second tax bracket, they never actually, you barely find that expense without care. So let's keep the discussion very simple. Now that you have your real property information, find out who actually owned that property. Is it the client himself, or is the spouse? In this case, if the client was married. Often your client might live with someone else. Find out the arrangement of that living, if you can. Perhaps it will give you some sort of indication. But again, find out before you really need that information. So let's say, for example, you have a self-employed personnel, and they actually work from their home. So that is something that's why sometimes it's a good idea to know about what kind of living arrangement they have. But assure that the information that you collect from them is secure. It will be securely kept and will not be shared with anyone else without their express consent. So this is, make sure that you are aware of that, so that the client knows that thing. And then, how long do you keep that information on your? Let's not get to that actually. So now that you have this information, you have the discussion topics, you prepare notes for your client. What do you do with that? Do you send it by mail, or do you send it by email, or fax it? I tend to do all three. I actually email them, fax them, and mail them. And why is that? Well, the reason is because, remember, uncertainty. We do not have control. Things that we do not have control, often it's better to take proactive measurements. So in this case, you actually send out three, but let your client know that hey, these are the means that you use. So now, once you build a rapport with them, after a while, maybe in the third or fourth, fifth meeting, so you know which method to use. So if it is convenient for them to use fax, you use fax. If it is convenient for them to use email, you use email. If not, yeah. Right. So, but be sure, that when you send a note disclosure, be sure that they received it. Call them and find out. Now, once they receive that, once you send out the note disclosure, right, or some sort of discussion notes, call them and find out whether they agree with it, or if it is something they disagree with. They'd rather ask where they find the problems on your note disclosure. Is something that you're missing or something that you misinterpreted? So get their feedback over the phone, or actually have them write you some email. Okay. Now, once you receive that information from them, go through the tier notes again and discussion and the discussion topics. So now that you assume that you have that feedback from your client or prospects. Now let's prepare a basic pro forma financial plan for your client, and this is based on the discussion topics, based on the TO you have. Now this is a pro forma financial statements. This will tell you is that the information that you received is basically raw information, and the plan that you're building, it is still raw, and it is not prepared to be delivery, but rather a discussion. Gives you a conversation ideas. So what they're doing wrong. So let's say, for example, in this case, if someone is earning $100,000 and they have no TFSA, that's a red signal. If someone is earning $130,000 and they have no RSP, that is a red signal. And what is it they're doing with that money? And so let's say, for example, if and what they've done in the event, if now assume that someone has done all those stuff, they have the RSP, they have the TFSA, and all those vehicles that are required to generate investments, they have that. And what they really have done to ensure that their earnings, if in the event if they lose their job, what they possibly will do, and whether there's a safety net from their, I wouldn't say safety net, rather some sort of backup contingency plan B provided by the employer. Excuse me. So now you have that information. So take a look at what type of insurance they have. Are they covered in the event if they lost their job? What if it is a business person? Do they have spending insurance in the event if they get sick, if the business is not running for a while? It's called overhead insurance. So these are the things that take a look at it. If they're running a business, are they properly insured? The business itself. If it is a professional, do they have errors and omissions insurance? These are the things that you have to take a look at it, and be sure to understand that the need of insurance, the need of investments, the need of real property, and more importantly, what they're doing to reduce their taxes. So now you have all this data, and what is it you do? Do you actually follow your financial institutions and pre-populate a plan for them? Perhaps you could do that. There's a lot of smart software you could do that, but I tend to advise that if you actually have education, if you know how to build a plan, do it by hand. Do it do it by pen, or write it up in a piece of paper, or especially use Excel sheets. A lot of accountant really has that habit of using Excel sheets. So build that habit into you as a financial planner. Use an Excel sheet. This will allow you to actually to understand the data very closely, and if there is a data redundancy, you will know. If you're putting it into software, often you will not know that. But if you're actually preparing that by Excel sheet, if there's a data redundancy, you will know. You get to see that. You get to read it through. You get to prepare it by yourself. These are the things that you have to notice. Now it's time. You prepared your pro forma financial statements. Pro forma financial plan. This is basically some sort of budgeting, cash flow projections, investment projections, insurance projections, tax projections, and real property valuation or projections, something like that that you worked on, something that you prepared for your client. And while you're preparing that, make sure the information you have is accurate, and the information that you're providing to your client is accurate. Now, it is true that often you will not have information on your hand or on your hand. What to do with that scenario? So let's say, for example, you specialize in a regular client, and you run into a friend of a friend while you're in the meeting process, and he cannot say no. So he asks you a question: is that hey, I have an income over $500,000, and what do I do with that? And right away, if you're not specialized in that field, so you know that they're facing a significant amount of tax issue, right? But you may or you may not know what to do with that information. So if you don't know, don't just make up something. Say that you don't have the information right offhand, but you'll be more than happy to get back to them. Take their contact information again, and be sure to call them whether you have the information or you don't, right? Because as a human, we can only know so much, and that's why we have help, right? That's why we have professional synergy. Now, when it comes to help yourself. When you take help, that doesn't produce actually much, but rather helping yourself by learning, by researching, by how could you conduct that research? So let's say if someone calls you up and say, hey, I have a tax issue with my recapture. I have a tax issue with some other stuff, right? So amortization. Often business owners they might face tax issue if they're selling a property. Now this is something that you gather, and then have something prepared for them, the retirement plan. Now, on that retirement plan, what is it you talk about, right? So find out what their goal is. Remember, when they want to retire, it's up to them. People really never really retire. In fact, they could go in pension and they really don't retire. And the reason is because that when the moment you retire, your brain actually become idle, and you actually become as a human being. I'm talking in general, that the people become obsolete right off. So be sure that you do not become obsolete. Be sure that you do not become a write-off. So even though you're retired, pick up a hobby or pick up something that you love to do. This is a note for your clients or for my clients or for my prospects. Even though you're retiring, please be sure that you are not retired. The moment you retire, you actually become idle in your mind, in your brain, and it is an indication of not being productive. And someone is not being productive is actually often they actually build some sort of sickness. So be sure that you are productive, either in a hobby or something else. This is something that this is for you if you're watching this as a prospect.